Hello, welcome to the September 2017 edition of TAXtalk. My name's Anita Monteith, and with me today I have Sarah Ghaffari, who is our SME Business Tax Manager.
Hello.
And Frank Haskew, who is Head of the Tax Faculty.
Hello.
Hello both, and welcome back after our summer break. We have actually been doing things over the summer, apart from having holidays, haven't we?
We have. We've been quite busy with a number of webinars and tax guides. I think, Frank, you did a webinar last week?
Yes, last week with Caroline Miskin, our practitioner manager, on agent strategy and also the new agent services. So if you haven't watched that, recommend you go to the website because there's a lot of valuable information there on how HMRC are looking to roll out its agent services.
And is that one available for everybody to see, or is it just tax faculty members?
It's tax faculty members.
That's a tax faculty member one.
Yeah.
Sarah, you also had
I did a couple.
Phenomenal
Yeah, we had a really
busy
busy summer actually. Two that really stand out. We had one which was the personal tax refresher. So we did a webinar on this last year, and then Sue Moore and I came back and did this update this year. So that's things like the personal savings allowance, the dividend allowance, changes to the cash basis for property income. So just a reminder of how all of those things affect the income tax comp. And then we had an FRS 102 webinar. Sharon Kirk from SWAT UK joined us, and that one we opened up to the financial reporting faculty as well. So if you're a member of that, you can watch that one free of charge.
Okay, and I think there is a special offer for joining the tax faculty at the moment, isn't there? So I think
£25.
£25. And please do join us because we'd love to have you in our club. But of course, ICAEW members more generally can also access things like our weekly newswire, on which we will keep you up to date with activity in the tax world. And talking of activity in the tax world, we've got a budget date, haven't we, Frank?
We have. Gosh, where shall we start?
With the date.
With the date. Yes, it was announced, was it yesterday, that the budget is going to be held on the 22nd of November. So we're all looking forward to that with bated breath, as you can imagine. But separately to that, we've now got a shed load, I think is probably the term, of finance bill material. So starting last Friday, we had published the latest finance bill, which had its second reading, I believe, yesterday. The Minister, Exchequer Secretary, yesterday was at great pains to point out that he had to go back for the debates and will probably be there till 4 a.m. in the morning. Yep. So we had that, and it's, let me just check my figures here, it's 665 pages long. It follows on, of course, from the Finance Act we've already had, which was passed before the last Parliament was dissolved.
So that was before the general election?
That was before the general election, so that was 148 pages long. So if I can do my arithmetic correctly, which of course an accountant is always somewhat dubious, I make that 813 pages of legislation that we will be having, and of course they could still be adding to it. So that's the task that we've got at the moment. I mean, shall I run through maybe some of the key things that are in there?
Yes, give us the headlines.
The headlines, okay.
The blockbusters.
The blockbusters. Well, yeah, there are some blockbusters in it, as you can imagine, with 665 pages. Most of it, of course, we've already seen because it was in the finance bill originally published just after the spring budget. But key measures that are now back in it, come back with a vengeance, if you like, are things like the corporate interest restriction. So that's clause 20. So that applies, is going to apply where you've got interest of more than 2 million, and effectively it's enacting the OECD guidelines in this area, so you're going to effectively have a restriction on the amount of interest you can offset against your profits of 30% of effectively your earnings before tax and interest.
Okay. Presumably there's a lot of anti-avoidance attached to that.
Just ever so slightly. I mean, that I'm trying to remember exactly how many. But both of these provisions are like 150
they're beefy.
pages.
They're really beefy.
They're longer than most finance acts ever used to be in the old days in their own right.
And the corporate losses, actually. I mean, when I first looked at that, although it's long and fairly complex, the temptation is to think that it is only a large multinational problem, but it isn't, is it, Sarah?
Well,
There's some SME issues in there.
The rule for carrying forward your losses is now going to change for mainstream businesses. So before the pre-April 2017 losses, what we've been doing is carrying forward against trading profits, but now this will open up and you can carry forward against other profits and also intergroup companies as well. So yes, there will be an anti-avoidance element, and there's the 50% profit restriction part as well, but there's also a part which just says the treatment of your losses is now different. So actually it's relevant to a lot of
because
companies.
The 50% restriction only applies to very large companies.
It's 5 million minimus,
yeah. So up to 5 million you're okay, and then 50% effectively beyond that you won't be able to offset. So
and I think we're going to do
a webinar or
you could call a webinar coming on.
Yeah, definitely.
Yes.
And of course, just to emphasise, both of these interest and corporate loss provisions are in effect from 1st of April, even though the
last 1st of April.
Yes, sorry, 2017. Yeah. So we're already in there.
So we've got a bit of work to do there. Frank, very briefly, you mentioned the stakeholder conference. You mentioned the minister, and yesterday, of course, we attended a stakeholder conference.
We did, HMRC's annual stakeholder conference, where HMRC do appear to have been a much better performance than we've seen in more recent years. I mean, that was certainly the message that we were getting. Also, they've talking about opening their new 13 regional offices. Croydon apparently was opened that yesterday morning. So they're obviously, that plan is proceeding now, starting to become apace. So we obviously heard quite a bit about making tax digital as well. The key announcement, which was made by the Minister before he rushed off, was this new proposal about business advice to growing businesses.
Yes, you've done a bit of digging, haven't you, Sarah? We haven't found that much so far.
I, as you know, wasn't able to attend the meeting yesterday, but I did see something in the press today. So it's a telephone service, it looks like, for businesses. I think it's turnover of greater than 10 million, and businesses who are looking to grow. And we think it's a telephone service which would be staffed by HMRC staff rather than tax agents. It's not our members, as far as we know, but we are trying to find out more.
I have seen already some confusion about that in emails this morning. So
and whether it's something that there would be a record, so would you get a reference number? Would you be able to trace back previous conversations?
Yes, if it's advice,
what's
normally
the PI
you would
cover?
Expect to be able to go back and ask again.
Exactly. So no, we're just not sure actually about how you have to identify yourself when you call up to say, actually, this is my business or I am this person. So we've seen a headline for this service, but we don't know the details at the moment.
But you're going back to HMRC and you'll find out.
Yeah, sent a few emails to try and do a bit of digging.
Okay. And a news item will be forthcoming.
Sounds interesting, though.
It does. It's just that you can imagine all the issues that we have as members when we give advice will be relevant to this too.
Yeah. So will they charge for it as well? Or where will they draw the line, I suppose?
Will HMRC charge for it? Frank? Moving swiftly on, let's move to our favourite subject of the moment, MTD. MTD came up yesterday. Sarah, do you want to just clarify where we are on MTD at the moment? What do we know?
So let's take it back to the 13th of July, which is when we had the announcement from the Minister.
The deferral.
Yep. So the general direction of MTD is unchanged, but the timetable has shifted and the focus is now on VAT. So the rules now are that if you are a VAT registered business and you have turnover above the VAT threshold, as at 1st of April 2019 or April 2019, you will be required to make quarterly reports for VAT via Making Tax Digital.
Right.
Other taxes, so income tax and corporation tax, we are looking at no earlier than April 2020. So they have not gone away. They've disappeared to April 2020.
I could say that message was came over yesterday as well, very
Yes,
much.
yeah.
But it's a deferral.
Yeah.
It is not.
But I've even read this
Fixed.
morning something which said that would only be for businesses above the VAT threshold. So there's still misconceptions out there, and the other taxes. In the past we were always talking about a £10,000 exemption threshold. That's what we will probably be going back to. It's not going to be in connection to the VAT threshold.
I mean, nobody has said that the de minimis would be 10,000, but we understand that we are still looking at something like that.
Yeah.
We're very surprised if we're not. But so we don't know what the 10,000 is. We are pretty sure it's going to be all businesses though. And we think 2020 odds are that income tax will come back first, maybe with corporation tax following on
and
after.
the pilots are still ongoing for income tax.
Yes.
So the work is still happening in the software industry and the conversations with HMRC and the software guys. For the businesses who are VAT registered but below the thresholds, so the voluntary as well, we understand that they can do MTD for VAT if they wish, but also the existing portal online system will remain in place, and you input your figures into the boxes.
And I think it's really worth us emphasising that we are looking at 2 ways of filing a VAT return. The 9 boxes, which is the one where you go in and you type those numbers in, which incidentally we understand is used by 89% of all UK businesses. That will keep going for as long as it's supported by HMRC. No date in sight for pulling that yet. However, MTD is something quite different, and remember this has got to be a hands-free from the point at which you get the invoice issued all the way through all of your accounting systems. I know, don't laugh. All the way through your accounting systems until plop, it goes in as a single total. Hands-free. So,
and we still don't know the exact start date. 1st of April, 6th of April, first accounting period, stagger group.
We've heard 2 people independently now make reference to the first quarterly return starting after the beginning of April 2019.
So that can be mid-accounting period.
So that could be mid-accounting period, exactly.
That's
And bearing in mind this applies to all VAT registered businesses above the VAT threshold, from a business of £90,000 turnover through to one multinational with £199 million worth of turnover. It's quite a big challenge. And Frank, we've started to do some work with those very large businesses, haven't we, to understand?
Yes, although I think it's not so much very large businesses, is it? I mean, it's anybody who's got a complex VAT position. And just taking an obvious example of the ICAEW, we're an organisation that has exempt.
We're multinational.
We're multinational. We've got group registration. We've got partial
Education.
exemption. We've got it all pretty much, except for probably some of the sort of special schemes.
Smorgasbord of VAT problems.
I mean, we even I think tour operators margin as something we were getting involved in. So we're not a big. We're 600-700 people. My understanding is that, as you'd probably expect, particularly with all the VAT schemes, I'm struggling to see how you could go hands-free on this, because you have your accounting records, but your accounting records then you're going to need to pull out the information, I think, to do your adjustments to then feed into your VAT. So I think at the moment we struggle to see easily how that's all going to be automated. I mean, it's not to say it's not possible, but potentially we're only 18 months or so away from this. So and also, of course, people tend to use spreadsheets for things like their partial exemption calculations. So I think there's quite a bit of work to do here to actually understand what larger businesses which have got complex VAT affairs are actually have to do, and the procedures they have to go through to actually come up with their VAT position. And once I think just even from looking at those sorts of adjustments, it's quite difficult to see that that's easily.
This hands-free business is...
So I think there's a lot to do here to actually understand this, and I can't help thinking there's going to have to be some easements around some of this, certainly to begin with, I guess.
Yes, I've heard people say yes, but large businesses already have computer systems and they already make quarterly payments of their corporation tax. However, quarterly payments of corporation tax are generally estimates.
I think that's a huge difference here. I mean, the VAT return is based on actual adjustments that you have to make according to your, what you'll say your special method is. So I think there's still a lot to do in this area, and time is obviously running short. So I think HMRC probably do need to come out to businesses such as ICAEW maybe and actually understand how it works. I mean, I think we have understood at least that the Making Tax Digital VAT will still be the 9 boxes at least, isn't it? So to that extent... As
long as the Brexit provisions don't change that, of course.
Yeah. But it's not as if they're going to be asking for maybe a lot more information and boxes that might actually produce your VAT return. So to that extent, it sounds as though it's going to be shadowing, if you like, what people are already doing.
It's probably worth just saying that we've had some draft legislation already, haven't we, on MTD? It came out last week. Not much, no. We had 25 pages, and on most of those pages there's reference to regulations. Yeah. So
I saw you cut and paste, or you had your scissors out.
I did. I had my scissors out. There was only 1 page of VAT legislation, so I thought I would physically paste it into the Schedule 11 of the VAT Act just to see what it looked like.
It was a proper analogue cut and paste.
It was on paper with scissors and sellotape, like I said. However, it did seem to me that the powers will be fairly extensive. On the income tax bit, in fact, Caroline picked this up this morning. She said, looking at it closely, it seems like at the moment when you ask for a tax return and you get it later, you get 3 months after the end of the month in which you've got it. That bit is going to be going. She couldn't find any reference to that. So it looks like the 31st of January will be the latest date that you could submit your tax return. So we do need to look at that in a little bit more detail. But clearly it's not just a superficial read. We need to dig a little deeper. But it is good that at long last we're beginning to see how the MTD system will work alongside the self-assessment system for those people who will be left in self-assessment, because there will still be some. Enough on MTD. We're going to do the hub, relaunch it soon with more information. So let's move on to some of the other tricky topics of the moment. You were going to mention the large business risk review.
Well, just to show that we're almost real time here, I think this morning Sarah alerted me to that HMRC had actually published a large business risk review. So hot off the press. I think the emphasis seems to be very much on risk management, and certainly I think it, from a very quick look, Sarah, but it seemed to be focusing on the sorts of things which we've already seen HMRC saying for large businesses. Yeah,
I'll caveat as well, I haven't had a chance to read through it yet, but talking about MTD for large corporates, and I don't think we've actually said it, but we were discussing earlier, weren't we, how the largest businesses have a customer relationship manager, but maybe it's the ones that sit underneath that who might need more support and help. So I think that this business risk review is looking at how those companies are categorised and ranked according to risk, and whether some sort of CRM approach to them would also work. So I see some sort of, groundwork being done here in ahead of MTD sort of thing. Oh well. But it's a consultation, so we'll do a news item. We'll have a read and see what it's about. I think 17 questions.
17 questions. I think the deadline is it sometime in December?
Yeah, December.
Ages.
Oh, a lot can happen.
Okay, thank you very much. Moving on to some of the other things that have been happening, RTI. RTI continues to delight and entertain us. We are seeing some dynamic coding happening. Dynamic coding, of course, is where HMRC receives information that can affect someone's PAYE code. So, for instance, maybe they've made a pension withdrawal, or perhaps they have had a big bonus, and they can amend the PAYE code in year, the intention being to reduce the amount of under and over payment of tax come the end of the year. In concept, don't have a problem with that, but there are one or two issues with the current process. Of course, many people have thought that RTI information was being fed back into the PAYE system for a long time, but apart from starters and leavers, it hasn't. Anyway, it is now. If people have issues, we're actually asking for you to send them in. We're collecting stories, examples that we can feed back to HMRC. If you could feed those through, please, to taxfac@icaew.com, that would be very helpful.
Excellent. I was going to say, I don't know whether we just wanted to pick up on another thing that was published as well this morning. The finance, we probably should have mentioned it right at the beginning, but they've got the new draft finance bill clauses for the next finance bill, so we're now going to have two lots on the go. So they have published some information on that this morning. Again, we're sort of hot off the press here, so forgive us if we're sort of still struggling to get to grips with this. It doesn't actually seem from the moment that it's quite as extensive as we thought it was, I think.
No, we had a look at the future tax changes that came in the spring budget packet, didn't we? Earlier, and we had predicted, we had thought,
and we got it all
completely wrong. So it's a good job we're not betting people. But one thing that I had been working on was the partnership taxation. There was a consultation to change or to clarify certain aspects of the partnership return, and we've got the draft legislation for that now. Okay,
and this is all going to be it's out for consultation, isn't it? Until 6 weeks, is that right?
That's
yes.
Right,
yeah. So we had the consultation on what the changes might be earlier in the year. Now we've got the draft legislation for 6 weeks, and it will then be published again after the budget in the form of a whole bill rather than just draft clauses for a bill.
Okay.
So it's not enormous.
But we could get more, I presume, couldn't we?
Well, it could easily get more.
We don't know that that's it, do we?
The budget will happen before the bill, before this lot's collected together. We're expecting we're hoping for not too much to be announced in the budget. But who knows? I suspect a lot of what we're seeing here is anti-avoidance legislation.
There is quite a bit of that, yeah. And also landfill tax, which is now an area of my interest, that disposals that not made at authorised sites will now be subject to landfill tax. Very important.
Right, will you surprise us more and more, Frank? Did you want to say anything else about this?
not about
draft
that.
clauses? No. Okay.
No, we'll leave it there.
Okay. Shall I carry on talking about RTI? Because I had a little bit more.
Oh, did you?
Say.
Oh, sorry.
I did. That's okay.
This is awkward.
No, actually, I just wanted to say that bank interest. Bank interest, I think people have assumed that banks were able to give personal information to HMRC about amounts of interest received. They do give some information, but they've never been able to attach it specifically to individuals because we don't have national insurance numbers held by banks. We understand that later in the autumn that some work is going to be done to try and match that a little bit more closely. It will still be problematic because obviously joint accounts will be difficult to match interest, but the intention is to try and get that interest into PAYE codes so that the tax on bank interest can be collected as well.
Because it's now paid gross.
It is now paid gross. There are obvious problems with that. And the first one that springs to mind, of course, is the £1,000 exemption for interest.
And we were also made aware of a couple of instances where individuals were told that they were due a repayment of tax.
Oh, yes.
Because the interest had been based on last year's figure and deemed to be paid net when it's actually paid gross. So it's important, I think, for agents to just be checking and to make sure that they ring HMRC and say, no.
Yes, if you find
We
any
don't need a
clients
repayment.
who have been told they've got repayments due on account of interest received, that will be extremely odd and unlikely to be true at all. So another systems issue. While we're talking about all this, of course, we should perhaps just mention simple assessment, which is another change that's going to be coming in. I think a lot of members will have noticed that clients are being taken out of self-assessment. There are particular groups who HMRC had in self-assessment and have been desperate to get out for a number of years. And I think top of that list would be pensioners who receive pensions that couldn't have PAYE applied to them, state pension for instance, where that pension is over the level of the personal allowance. The only way you could collect the tax on the pension was through self-assessment. Using some legislation that was brought in by Finance Act 2016, it will now be possible to actually send them a new form. I think it's an SA
302?
302, yes, that rings a bell.
And using this form, they will be able to collect the tax on that pension income. We're expecting that to start later this year. Apart from that, I think we probably should mention some of the other things that we've got simmering at the moment. What else have we got on our schedule of events? We had the trust register you wanted to
I was going to
mention.
say, I just had probably three, I think I'll keep them short, snippets. But firstly, anti-money laundering. I think it's people should know that the fourth anti-money laundering was passed on the 24th of June, or the regulations were, and the CCAB, the sort of umbrella accountancy body, has published guidance on that, and that came out last month. So I think it's essential that people should be reading that, because the changes to the money laundering rules have now been made. And in a sort of similar vein, I suppose, we've got the corporate criminal offence for facilitating tax evasion measures, which were in the Criminal Finances Bill, which were passed before the dissolution of the Parliament, and that comes in on 30th of September. So people are going to need to make sure they got procedures.
Another calendar date.
But people are going to need, there's some guidance out there that's been published by HMRC, but people are going to need to remember that they need to have procedures, risk assessments, all the sort of things that they probably already had, but that's now going to be with us as well, so that's another thing to watch out for. And then finally, just as you said, the trust register, that we've now, with the new trust, you've got to submit information to HMRC for this new trust register, which of course has been
There's been a problem for agents, hasn't there? Agents couldn't access the online service.
No, so I mean, we're waiting for that. It's due in the autumn, but judging from the weather this morning, I think autumn's already arrived, but we haven't seen the agent trust register.
Yes, the deadline was going to be the 1st of October, wasn't it?
5th of October, yes. So, and we've been pretty active. Sue Moore, just to mention our personal tax manager, she was pretty instrumental in trying to push that agents needed a longer time for this because we haven't got it.
No, people have been very worried. They've been stockpiling.
Yeah, they're building
trust
it up.
information.
But HMRC have relaxed it to the 5th of December, so that was a good win. Well done, Sue. Obviously, I presume that's dependent on actually producing the agent.
Yes, we still need the service,
still need the
so that
service,
people can do it.
but it would suggest that hopefully it will be imminent. But at least we've got a bit longer in which to do it. So those are my three little
Thank you.
snippets.
Your little run. Sarah, did you have some hot things you wanted to mention quickly? What's coming up?
Just to say,
webinars?
we have got a couple of webinars coming up. So on the 3rd of October, we have a Keeping Safe in a Digital World webinar, joined by our IT faculty colleagues. And we also have some tax guides in the pipeline, so keep an eye on our website because we'll be producing more guides, something on the new loss relief rules, something on incorporation and bits and pieces like that. So
Okay.
lots happening.
And then we've got a budget webinar,
On
on the 27th of November, and that will be with Becky.
Yep.
And Rebecca Bennyworth, yes. And I expect we'll do a tax talk.
Budget special.
Budget special tax talk. I can feel tension rising already. So we've got a lot going on in the next few weeks. We hope you found today's tax talk useful. Please do get in touch if you have any comments, and in the meantime we look forward to talking to you again in October. Thank you.